Welcome back to Debit and Credit Online Classroom. In this video, we have discussed about the analysis of financial statements. If you have not subscribed my channel, please subscribe it. From the definition of management accounting, we have seen that it is the presentation of accounting information in such a way so as to assist management in the creation of policy and in day-to-day operations of an undertaking. So by presenting the financial statement as such will not help the management to take policies decisions. These financial statements has to be analyzed. These data has to be analyzed and interpreted, and according to that only the management can take a decision. So for that purpose, we should start from the analysis of financial statement. Let us see what the financial statement is. Analysis of financial statement is a systematic process of analyzing of financial information in the financial statements like statement of profit and loss, balance sheet, and cash flow statement of an enterprise to understand and take decisions. So it is the analysis of systematic process of analyzing of financial information in the financial statements. We know that statement of profit and loss, balance sheet, and cash flow statements are the financial statements. So we have to analyze the informations given in these statements, and that will help the enterprise to understand and take decisions. The complex data given in the financial statements are divided and broken into simple and valuable elements, and relationships are established between the interdependent or related elements of the same statement or different financial statements. That is the process of analysis of financial statement. That is, the complex data provided in the financial statements are divided and broken into simple ones, and valuable elements and relationships are established between the independent and related elements. So the relationships are established between interdependent and the related elements of the statement or same statements or different financial statements. And that is the analysis of financial statements. The financial analysis, we studied that the complex data are simplified. So analysis is the process through which the financial data are simplified by proper classification given in the financial statements. And this simplified financial data is interpreted. That is, it is concerned with explaining the meaning and significance of financial data. So these simplified data are explained. The explaining of the meaning and significance. It is explained, and its significance is also explained. That is the interpretation. And first of all, the complex financial data are simplified by the process of analysis, and its meaning and significance is explained through interpretation. So analysis and interpretation are complementary to each other. First of all, we have to simplify the data. For that we need analysis, and the meaning and significance is explained through interpretation. That's why they are complementary. Analysis is not of much use without interpretation of analysis. We know that the financial statements will give information about the assets, liabilities, equity, revenues, expenses, profit earned or loss incurred, and cash flows of an enterprise in absolute amounts. But seeing this informations, the external parties will not be able to understand anything which are valuable for them. For that purpose, These data have to be analyzed. They are analyzed with the financial statements of the same enterprise for earlier years or with that of another enterprise or similar nature and size operating in a similar business environment. For this purpose of analyzing and interpreting, we need some tools. The tools are the comparative statement, common size statement, ratio analysis, cash flow statement, and fund flow statement. The comparative statements, from the name itself, that is comparative statement, from that itself we will know that it is a comparative study of items or components of financial statements. That is the balance sheet and statement of profit and loss for 2 or more years. In comparative statements, amounts of 2 or more years are placed side by side along with change in amounts in absolute and percentage terms to facilitate comparison. It is also known as horizontal analysis. Common size statements or common size financial statements mean statements in which individual items of financial statements of 2 or more years are placed side by side and thereafter converted into percentage, taking a common base. Common base taken as total of assets or total of equity and liabilities in the case of common size balance sheet, and revenue from operations in the case of common size statement of profit and loss. Ratio analysis as a quantitative method of gaining insight into company's liquidity, operational efficiency and profitability by studying its financial statements. Thus, shown in ratios. Cash flow statement is financial statement that provides aggregate data regarding all cash inflows a company receives from its ongoing operations and external investment sources. It also includes all cash outflows that pay for business activities and investments during a given period. So, all the cash inflows and outflows related with the business activities as well as the investments during a given period as shown in the cash flow statement. Fund flow statement is a statement prepared to analyze the reasons for changes in the financial position of a company between two balance sheets. It shows the inflows and outflows of funds for a particular period. Cash flow statement shows the inflows and outflows of the cash, and fund flow statement shows the inflows and outflows of fund. On the basis of materials used, or on the basis of firms involved, and on the basis of modus operandi, we can divide the financial analysis into external analysis, internal analysis, intra-firm analysis, inter-firm analysis, horizontal analysis, and vertical analysis. On the basis of materials used, it is external and internal analysis. External analysis is conducted by those who do not have access to the detailed records of an enterprise and therefore have to depend on published accounts, that is statement of profit and loss, balance sheet, directors and auditors report. Such type of analysis is done by investors, credit agencies, government agencies and research scholars. This analysis, that is the external analysis, is conducted by the persons who do not have access to the detailed records of an enterprise. From that itself we can understand that it is done by the external parties because they don't have the access to the records of the enterprise, therefore have to depend on published accounts. So they have to depend upon the published accounts, that is statement of profit and loss, balance sheet, directors and auditors report. Such type of analysis is done by investors, credit agencies, government agencies and research scholars. Why they have to do? Investors should know that whether their investment will get a return. Credit agency for the purpose of solvency, whether the firm can repay the loan. Government agency, tax, and for the research scholars according to their field of research. Internal analysis. This is conducted by the management to know the financial position and operational efficiency of the organization. The important feature of such analysis is that the management has access to all information of the enterprise, and therefore analysis is more detailed, extensive, and accurate. So this is conducted by the management to know the financial position and operational efficiency of the organization. The important feature of this analysis is that management has access to all information. In the case of external analysis, they didn't have the access to the detailed records. But the management, they have the access to all information of the enterprise, and therefore the analysis is more detailed, extensive, and accurate. On the basis of firms involved. Intra-firm analysis and inter-firm analysis. Intra-firm analysis means comparison of financial variables of an enterprise over a period of time. It's called the intra-firm analysis. It is also called time series analysis or trend analysis. That is, the comparison of the components of the financial statements of the same enterprise over a period of time. It is 2 or 3 years. So that is why it is called the time series analysis or the trend analysis. Interfirm analysis. Interfirm means between two or more enterprises. A comparison of 2 or more enterprises or firms is known as interfirm analysis. It analyzes and compares financial variables of 2 or more enterprises or firms to determine their competitive position. When single set of statement of 2 firms is compared, it is known as cross-sectional analysis. So this is a comparison between 2 or more enterprises. It analyzes and compares financial variables of 2 or more enterprises or firms to determine their competitive position, to know which one is going very well. When single set of statements of 2 firms is compared, it is known as cross-sectional analysis. On the basis of modus operandi, how it is operated. Horizontal analysis and vertical analysis. Horizontal analysis. Horizontal analysis interprets the change in the financial statements over 2 or more accounting periods based on historical data. It denotes the percentage change in the same line item of the next accounting period compared to the value of the baseline accounting period. So, the financial statements of 2 or more years are kept side by side, and the percentage change in the same line item of the next accounting period is compared to the value of the baseline accounting period. So the components are compared of 2 or more years. Same components are compared. Vertical analysis. This is a method of analyzing financial statements that list each line item as a percentage of base figure within statement. This is made to review and analyze the financial statement of 1 year only. In the case of vertical analysis, we will take only 1 year data and it will be expressed in percentage to a base figure within the statement. I believe that you have understood what financial analysis is, then tools of financial analysis, and from next video onwards we will be learning each of the tools in detail with problems. Thank you for your support and please continue it. If you have not subscribed my channel, please subscribe. Thank you.